A very good afternoon to you. Asian stocks rose in today's session with large bets on a rate cut out of the United States later this month, while the Nikkei made healthy gains following the resignation of Prime Minister Shigeru Ishiba. And positive GDP data showed that the Japanese economy grew faster than initially estimated amid strong exports and private spending. The Nikkei share average rose by 1.45%. The Hang Seng Index gained 0.85%, while the Shanghai Composite Index ended the session up 0.4%. U.S. markets closed on a subdued note on Friday. This as U.S. non-farm payrolls came out with lower jobs numbers, firmly cementing the belief that U.S. interest rates would be cut next week. The weaker data also resulted in the dollar weakening further, which in turn benefited emerging market currencies like the rand. The Dow Jones Industrial Average declined by 0.5%. The S&P 500 fell by 0.32%, while the Nasdaq Composite Index ended flattish, down 0.03%. Looking at the local indicators, we see that the all-share index is currently trading up 0.9%. The rand is trading at 17.55 against the US dollar, 20.58 vis-a-vis the euro, and 23.72 against the British pound. On the commodity front, we see that gold is trading at $3,355 an ounce, platinum at $1,343 an ounce, while Brent crude oil is trading just below $66 a barrel. All right, let's get into it now with Sean Morrison. He's a portfolio manager at Rand Swiss. Thank you very much, Sean, for joining us. So the market is almost 100% certain of a U.S. rate cut come next week, but there is still some inflation data that's yet to come out. Do you think that's likely to make any difference?
Hi, Nampu. Yeah, I think the inflation data is the last piece of the puzzle. When you look at CPI inflation data, it's not the core measure of inflation that the Fed does use. They use the PCE index, but it's still relevant none the same. But the market is, like you said correctly, pricing in, it's a 90% probability of a 0.25% cut in interest rates, and now a 10% probability that we could maybe even see a slightly bigger cut than expected of 50 basis points or 0.5%. But I don't think the inflation data, it'll be watched, but I don't think it's going to change the outcome. I think next week we are getting that interest rate cut. It's really about what comes thereafter. If inflation is too high, if it's, then it sort of limits the ability of the Fed to ease monetary policy. And then, but we are expecting 2 more cuts after that.
Okay, so the automatic question would then be, what does that mean for the SAB? What will it decide a day after the US Fed?
I think we have been loosening monetary policy, so we have been cutting, and I think that we will follow suit. We did cut by 25 basis points at our previous meeting, and I think we're going to, I think the interest rate differential between South Africa and the US, and that if the US cuts, it does make it easier for us to cut, in terms of the carry trade opportunity. So, yeah, I think we can expect another 25 basis points from the SAB directly thereafter.
All right, we wait and see. So what's your understanding about the resignation of the Japanese Prime Minister? And it seems that the market there welcomed the move.
I'm not sure that they welcomed it. Equity markets reacted positively. The resignation is quite sudden. It's after tariffs had been negotiated with the US, which is ironic, but his party had lost a majority share in some municipal elections, and so he's falling on his proverbial sword, I suppose. When we see equity markets up, it is a bit of an inverse correlation to what we're seeing with Japanese bonds and the Japanese yen. That sort of policy uncertainty has seen some weakening of the yen, but Japan is the 4th biggest economy in the world, and it's an export-driven economy, so at weaker currencies generally better for them, and it is reflecting in positive moves on the Nikkei.
All right, and then apart from the rate story, what other factors are you expecting to be driving global and local markets this week?
Look, I think internationally, I think the CPI, the US CPI inflation data is obviously key. We do have an ECB rates announcement this week as well, so the Eurozone, but we're expecting not too many fireworks there. It's really about the guidance, what happens in their press conference. So interest rates are expected to remain unchanged. And then locally, we do have GDP data coming out tomorrow. So that would be from the domestic front, I think, a key data point there.
And what's your expectation on the GDP? Better than the first quarter?
Yeah, we think we're going to see a slight tick up there, or a decent tick up. I think 0.8% quarter on quarter and probably 0.9% growth year on year.
All right, we wait to see. And lastly, your comments on Sun International, the hospitality and gaming group. They came out with their half-year results, reporting adjusted headline earnings per share up 6.5%, and their income sort of around that same level as well. Your thoughts on them very quickly?
Yeah, the rates. I mean, the results were okay. Impacted by that Table Bay hotel. That's the waterfront's been renovated. I think what is quite encouraging is looking at how fast that online gaming and online betting of that business is growing. It's up 70%, and I think it's like 870 odd million in income from that division. So it's becoming quite substantial to group earnings, the online stuff.
All right, Sean, thank you so much for your time. Good having you back on the show. That was Sean Morrison. He's a portfolio manager at Rand Swiss.